Hey everyone, welcome back to our channel. My name is Desmond Samuel, and in this video, I'll be taking you guys through the potential trading opportunities for the week ahead and the trade result of our previous weekly outlook. So the first pair on my list here will be Euro USD. So guys, I called Euro USD in my previous weekly analysis, and I said to you guys that you should be looking to go long on the Euro, or if at all you want to go short, that you should wait for the minor support level to get broken. And I'm going to show you guys exactly what happened. So I called Euro USD right at this point here where it was still falling. So I said, okay, fine. Two things. If at all we are actually going to short this guy, it has to come and break this level and retest before we now actually short it. However, me, I was on the bullish side of things. I told you guys that I am actually favoring the upside by the tune to the tune of 70%, and that is exactly what has played out. We actually came in here and then we rallied all the way back up for a whooping 246.9 pips. So yeah, that is the result of our weekly analysis that I came on here last week to tell you guys, and now we are actually looking to head back down. So we have actually put in a double top here on the Euro USD, and personally, I don't like to trade in a range because now this is a range. All right, we've broken out, we've retested, and then we're actually gone on to hit our take profit. So now we're actually stuck in a range. So for me, before I even actually do anything on the Euro USD again, I actually see either a clear break above and retest, or I'm actually done with this guy. Okay, I'm actually done with this guy until we actually come and break below this level here. But I do have a concern though, because we have this trend line which has been here for months and months and months. So you see, you must always have contingency plans because anything could happen at any point. We do not control the market, guys. Anything could happen at any point. So I called Euro USD from this bottom. If you doubt me, check my previous weekly outlook. I'll leave a link somewhere here. So I called Euro USD from here, and then we've gone on to hit our take profit. So now, as you can see, immediately we got to this our next previous minor level here. We actually rejected off of that, and now this is also a Fibonacci play happening right here. So a lot of things are going on right now in the financial market, and as you guys know, this is the festive period, so they tend to be really, really, really low volatility in the market. So if at all you're trading the market, you must significantly reduce your pip count or your pip target from if you used to target 50 pips before, you should be targeting 20 pips, 10 pips, all right? Because the last thing you need is you getting into a trade and then it takes a whooping freaking three months for a 30 pip move to play out. All right. So you need to actually reduce your risk and then also reduce your pip target. So like I said, if you used to target 50 pips before, you should actually target 10, 20, 30 pips. All right. So for Euro USD, for me personally, I would advise that you stay clear off of now, because we made a huge amount of money. And I have a policy that if the market has given you this sort of money, that you should actually take a chill pill. All right. Go spend some time with your family and let the market reset. Let it take a breather. All right. So let it just catch up, let it just catch its breath, and then we'll actually come back here on the Euro USD. But for me, if at all anything has to happen, it has to break this level for me to actually start selling, or has to break above this level for me to actually start buying. Um, I'll show you guys exactly why I feel this way when we head on to the dollar index, the XY. So, but for me, I would advise that you just free this guy, because it will make significant amount of money from this. So we're done with this guy. Yeah. Or if there's enough volatility in the market to come and break below this minor level here, then we should actually be looking for short opportunities to this key level. But be mindful of this trend line here, because anything could possibly happen. Don't worry, when the market is ready, I'll come on here again to let you guys know. So heading on to GBPUSD. GBPUSD did not fall as much as Euro did. Instead, it came on here to this point that we actually spoke about, and then reversed. I think I mentioned two levels to watch out for this, for the pound sterling. I mentioned this level here, and then I also mentioned this level. So this one was the one that got activated because of the FOMC, the Fed's meeting. All right, so this actually got, and also CPI. So this actually got activated, and then it rallied to the upside. I missed this trade though, because I was banking on the pair dropping all the way to this point. Now this would have made me a whole lot of money than actually coming in here, and there was no clear. There was the setup wasn't the kind of setup that I like to see. You don't give me this sort of bullish engulfing candle of how many pips. That is too close to the take profit for me. That's over 100 pips. That is too close to my take profit. So I just left it. So moving on for the pound sterling, I would actually be sitting on my hands until I see this market pull all the way back down, because I actually feel like this is a fake out considering what is going on in the bigger picture here. Once again, if you're new to my channel, kindly hit the subscribe button, because I come on here to give you guys weekly outlook, and then we actually tend to make a lot of money from my free signals. So this is exactly what's happening here, as you can see. So I am still heavy on the pound sterling pulling back to this level here. This will be the deciding point for this pound sterling. If at all we're going to be shorting this guy, or we're actually going to be sitting on our hands. Once again, this is the weekly time frame, so this could take at least 2 weeks to play out. All right, so for the pound sterling, I am actually sitting on my hands until I see the market come to this point, probably break below here. Then I can take my shots all the way to 1.21000. However, one thing you need to understand once again is that this is the festive period. This is a holiday. This is Christmas. So they tend to be really low volatility in the market. So if you're usually targeting 50 pips before, say for instance now that the total amount of pips from here to here is 237 pips, I'm not holding my trade to this point. I might just probably target somewhere around here, probably 70 pips thereabout, quick in and out, because there is no volatility in the markets this period. This is a festive period, and usually the hedge funds and everybody goes on holiday. The people that actually drive the market go on holiday. So you'll be stuck in that trade till probably next year just to get 50 pips. All right, so the next pair on my list would be the NZDUSD. So this pair, I've been highlighting this pair since mid this year, and we've actually broken this level and formed what seems to be an inverse head and shoulders. However, for us to for a chart pattern like this to be validated, we need to see the market pull back to this level here, retest the neckline here, and then see the market rally all the way up from here. So I'll be waiting to see what the NZDUSD can do, for the remaining last few days of this month, December. And then if we indeed get this pull back to this point here, that will be significantly impactful, because now that would give us the opportunity to go long on NZDUSD for some quick scalping of about 10, 20, 30 pips. Remember, once again, this is the festive period, so you must reduce your pip count, and then reduce your risk, reduce your exposure. So the next pair on my list now will be gold. So gold, I highlighted gold somewhere around here. Then I was telling you guys that if I told you want to go short on gold, that you must wait for a retest. However, that retest didn't happen. Instead, we got a bullish engulfing candle. And whenever you get a bullish engulfing candle, you must understand that is the no-go area, because you can't say you want to short this pair here. There is way too much momentum coming into that our level that we're actually looking out for. So you don't short from here. You wait for the market to actually confirm its direction, because at this point it could go up, at this point it could fall back down. So you need to actually wait patiently. And for gold, this seems very messy. This is not my kind of setup. This is a very messy pair at the moment. However, let me see something. Okay, so if indeed the gold wants to fall, it has to break this trend line. It has to tell me that it is ready to fall and roll over on its head, and then I'll come and do what exactly I know how to do best, place my trades. All right. So for me, gold is a 50-50 at this point, because this was also a structural level, and we just broke that, with this bullish engulfing candle on the daily time frame, and they're actually pulling back here. So this could potentially be a trend continuation for gold. Remember, we've been on this upward rally for a while, so this could actually be the typical case of break and retest, and then we actually continue to the upside. However, if gold wants to fall down, it would definitely tell me, it would definitely let me know. You know why? Because I have my counter trend line here. This serves as a helmet, you see. So, and I don't get into my trades too early, and then I know exactly where to put my stops. So if gold wants to fall, it has to come and break this counter trend line and then roll over on this head to the downside. And that's about gold. The next pair on my list now would be The next pair of my list will be AUDUSD. Guys, I know I came on here to tell you guys once again that I know a lot of people are actually eager to short AUDUSD, but I was very concerned about this trend line here, because I saw that this was literally a break. Guys, one thing about me is this, yeah. I've been doing this for well over 6 years, so I know exactly when the market wants to trick me. All right, I know exactly when the market wants to trick me. I wasn't comfortable with this kind of setup here. I know that this was a double top. This was a neckline break and retest, but I still wanted my counter trend line to get broken because I was concerned about the structure level here. All right, because this was an impulsive move, like it or not, this was an impulsive move, and we didn't have any decent pullback. So usually, once you have an impulsive move like this, rally, you need to see a pullback to at least 50% of the entire stretch, and then you now carry on from there. And that is exactly what AUDUSD did. So I wasn't comfortable shorting this guy at the moment. In fact, I said to you guys that if I told that I'll be shorting this guy, he must come and give me an extra confirmation here. The double top and the neckline break and retest wasn't enough for me. Once again, I'm very demanding when it comes to this market. It has to give me exactly what I want. It has to be very obvious before I take the trade. So I was okay, fine. For me to short this guy, I must see this pair do something like this. Just come below here, retest, and then drop, or come and break this trend line. All right. So I had two things I was actually looking out for, and to people's biggest surprise, not my surprise though, because I'm hoping it wasn't also for your own surprise, because I came on here to actually inform you guys and warn you guys ahead. So the market came on here, retested this level, and rallied to the upside. They actually put a double bottom here if you look closely, and then this was also a Fibonacci play. All right, and you guys know me, I don't joke with my Fibonacci. Whenever the Fibonacci aligns, I trade carefully. So for this for this pair here, that was exactly what happened. We actually came on here, we balanced out, and then we rallied all the way to the upside. All right. However, I did not take this trade because I was on the bearish side of things. I was just waiting for that extra confirmation, and since I didn't get it, I didn't take the trade, and that's how I trade, guys. The market either does what I want it to do, or I don't take the trade. It's as simple as that. So for AUDUSD, moving on now, this is very tricky, because now we have actually found our way back to the February range. Remember, we were in this range for since March, since February all the way to August. All right, so now we found our way back into this range, which is gonna be nasty, very nasty, very choppy. And in fact, the general feel of the market this month will be very choppy. All right, so if you must trade, like I said, reduce your target. So for AUDUSD, I have absolutely no business with this pair, and in fact, it disgusts me. It's very disgusting. I don't even want to look at it because it pisses me off all the time. The next pair here on my list would be the USDCAD. USDCAD has been falling for quite some time now, and I'd like to highlight something here for you guys to actually understand what is happening. So we seem to have put a head and shoulders pattern here. We seem to have put a head and shoulders pattern here, in the sense that this is the head, this is the left shoulder, and then this is the right shoulder. However, to validate this chart pattern, we must see a neckline break. This is the neckline here, so we must see the neckline break and retest. Once we do see the neckline break and retest, then we shall actually start targeting the June lows. All right, so this was the lows that were given by July. So if we do actually break this neckline, we should see the USDCAD drop here. Long-term target. We're talking probably from now till if this happens, we're talking probably from now till January, February, because this pair is not as volatile as gold or any other pair that might take 3 days for an entire 1,000 pips to play out. For this guy here, you might actually need to wait till like January. So for me personally, that is exactly what's happening, and I am actually very careful of this pair, because what we have actually done here is that we have actually broken this uptrend here, and on the bigger time frame, this is exactly what is happening. This is looking like a triple top here. We have this first top here. We have shit, I hate these two. I don't know where I keep getting these two from. So you have that first top, you have this second top here, and then you have this third top. All right, so if and only if we do get a neckline break, best believe the USDCAD will drop, and it will drop heavy. It will drop and it will drop heavy. We're talking targets of here. Okay, we're talking targets of here. We might actually drop all the way down to this point here. If we do clear this level and clear this level, actually dropping all the way down, and we're looking at a drop to the tune of 477 pips, which is a lot of pips, and that doesn't happen overnight. So with the way this market closed, this is a heavy weekly bearish engulfing candle. So I'll be very, very careful, and we pinned, and we are actually sitting heavy on this level right here. However, on the bullish side of things, we do have a Fibonacci play out here lining up. So we have this A to the B to the C, and we should actually get a continuation of a D. However, once again, I'm not here to predict the market. I'm here to react to exactly what the market does, and I also advise you do so, because trading is reactive and not predictive. So let the market do what it wants to do, and then we can come and actually play by its rules. Once again, impulsive move, we need a correction. So if you're actually interested in this pair here, you should be watching out for this level, because this is an impulsive move. Usually when the market drops this way, it pulls back. All right, so you should actually wait for this level to get tested, and then maybe we can see an opportunity to ride this guy all the way back to the downside. Okay, but you must be careful, because now you're in the middle of a pullback and a potential reversal to the upside. Remember that this whole move on the weekly time frame is a Fibonacci play out, and then we could actually see a pullback to this point here to balance out to this key level, and then we now actually rally up. Is entirely up to the market. But for me to take this trade, I must see the pair actually come to this level here, play around a bit, and then give me that confirmation candlestick, which is a 4-hour bearish engulfing candle or a counter trend line break. Then we could see this guy drop all the way to 1.33724, and that's about the USDCAD. And the last pair on my list now will be the dollar index. So the dollar index, as you guys know, or as most of you guys are aware of, but for those of you guys that are actually new to forex trading, the dollar index is a basket of currencies paired against the dollar. All right, so this is what it's looking like on the dollar index. We did actually get a break below this level that I was actually talking about in my previous weekly analysis, where I came on here to tell you guys to be mindful of this level, because after we get a breakout, we get the first level, we should get a bigger pullback, and that is exactly what has happened here. And if you bring your Fibonacci from swing high to swing low, you can see that we tapped right into the 0.5 region, which is the reason as to why I was actually bullish on the other majors like the euro and the pound sterling. So now we actually failed to put in because this also looked like a head and shoulders pattern. If you get my point, this was looking like the inverse head and shoulders pattern, where you have the head and you have the left shoulder and the right shoulder, but this didn't get activated because we got to this point and then we totally dropped all the way to the downside. So the predominant trend here, which was the downtrend, actually won the game in the first place. All right, so how do you handle this guy moving forward now? So two things you must actually understand is that we have actually broken out, and then we are actually looking like we want to retest. And once again, this is the festive period. This is holidays, so the market is definitely gonna get choppy, definitely gonna be slow, definitely gonna piss you off, definitely gonna get on your nerves. So you must trade carefully, and if you must trade, you must actually reduce your pip count. So for the dollar index here, we do have what seems to look like a double top here. So you might actually be seeing this guy drop further to the downside, because this is also a retest here, and then we could potentially see it balance out at 1.101.100. However, for me personally, I have a bullish bias on this guy. I'm actually very, 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 very bullish on the dollar long term. Okay, but once again, you cannot predict this market. You can only react to what the market shows you. Okay, because the market usually throws hints here and there, so it is left for you to decipher that and make money when you can. And then also, let me check if this is a Fibonacci play happening here. This is looking like a Fib play happening, but let's just do a top-down analysis on this dollar index and see where we are at. So the dollar index right from 2021 to 2022 gave us an intense rally all the way to the upside. And then this was just a pullback of this whole rally. We're talking from this recent low all the way to this high here. and then this is also sitting on a Fibonacci level. And you guys know me, I love my Fibonacci. I do nothing without Fibonacci. If I could cook food with Fibonacci, believe me, I would. All right, so this is also looking like head shoulder pattern, similar to what we are actually seeing on the euro dollar. And you guys know that the euro dollar is the closest thing, to the negative correlation of the dollar index. In fact, this is the euro dollar turned upside down. All right, so for me, I would actually wait for this guy to do whatever he wants to do. Let it just get itself right. Let it just be ready, because this could actually be a stop run. This could be a stop run to manipulate others that had their buy orders here, and then get back to the upside. However, until this market breaks up below, sorry, until this market breaks above this 104.000 mark here, I'm not actually I'm very, very careful. In fact, I won't even be interested in this market. So I need to see I need to see DXY break back above this 104.000 here, which is this level. And then once it does that, then I'll be confident enough to say, okay, fine, the market is about to get back to its uptrend. Because if you draw this carefully, you can see what's happening. This is a trend that the market seems to be respecting. And if you go down to the daily time frame, you see it in a clearer picture. This is the first touch, second touch, third touch. So the market has to come and break above this level for me to be confident in my major shots. All right. All right, so guys, that is the end of our weekly analysis. Once again, you need to remember that if you're new to this channel and you want to make money, make sure you hit the subscribe button, and then leave a comment on what you think about this video, or any pair that you're actually struggling with and then you want to see me break it down for you in simple terms. Okay, let me know. All right, so once again, stay safe and remember that trading is reactive and not predictive. See you in the next video. Bye.